Hello everyone, it's Vaibhav here. I welcome all of you to today's session of JForex Indicators Explained, where we consider different indicators which we can utilize to look for profitable trading opportunities using the JForex tools. So we will be considering another interesting indicator for today's session, where I will be explaining to you how we can utilize the JForex platform provided indicator of moving average envelope, which can be shortened as MA envelope. So we will see how we can take advantage of this particular indicator to look for some opportunities where we will have a good risk reward ratio also, and along with that we also need the probability of ending the trade on a profitable note, on a winning note, to be higher compared to the probability of it going against our chosen direction. So we will see how we can customize this indicator to take the advantage of movements, the volatility in the market. We can go for various currency pairs as well as CFDs, and also there are shares available on the platform. So we have all kinds of instruments available on the platform where we can apply this indicator and start our trading business. So let us now head to the JForex platform, which has been developed by the Dukascopy Bank SA. Here there is a chart of Euro USD drawn on the hourly candle grid. I have plotted this chart, which is looking interesting. We have seen for most part of this week the momentum in the Euro USD has been bearish, but after this low close to parity, the Euro USD had gone on exactly close to the 1.00. I think that is low. I'm not totally sure, but it is somewhere close to 0.9999, I think, and that's exactly, or you can say just one little tick below the parity. So it's interesting price for Euro USD, and we are seeing these historical price moves in today's session. Now Euro USD has climbed back almost like 60 to 70 pips from day's lows, and even personally I had taken one trade early in the day which has closed on a profitable node as I had gone long close to these day's lows. Now that aside, we will be looking to plot the indicator, and there are two ways to find these MA envelopes. You can do a quick search, you can go to the list also, and you will find these listed amongst these overlap studies. Here it is, MA envelopes. Otherwise you don't really need to do all that work. Simply type in MA and envelopes, and there it is. All right, so we have this interesting indicator which is derived using the moving averages. We can use various kinds of moving averages. This time we will be simply sticking with the simple moving average, and as I had explained in one of my earlier session, simple moving average is calculated by considering the closing prices or any applied prices for the underlying instrument over the given time horizon. If you are considering 10 hours, this is the default setup with the 14 candle period data being considered. So we have the moving average of 14 hours considered for this formation, and along with that the standard deviation of zero point 0.1 has been applied to form these two bands, one on the higher side, one on the lower side. So we get these price bands where we can use this price band to see if the underlying instrument is trading sideways or if it is trending, and it is to that extent it can be helpful to rely on this formation. But of course, as we have seen in the case of moving averages, there are many whipsaw trades where the underlying instrument doesn't really move anywhere, but we see a lot of trade being generated which results in smaller profits or even losses. So to avoid that, this MA envelope indicator was developed, and to some extent it has succeeded, but of course no indicator is perfect, and here also the trades generated might not go anywhere or might only go to some extent in profit and then reverse the course. So that possibility, that probability is still there. So we have to be careful while using these indicator and look for trades accordingly. So if you consider these price formation here, starting from 6th of July to the 10th of July or 8th of July, you can say, the momentum was not on any direction. It was simply sideways, where we were seeing these whipsaw moves, sometimes on the upside, sometimes on the downside, and there was no clear break on either side. Now, if you were to simply utilize these formation of the envelope in a simple manner, that the closing price, whenever the crossover happens, the price comes from the lower side and ends up closing on the higher side, and if you generate a buy trade here, it will go in profit, but only to some extent, to say 15 to 20 pips, and then it will reverse the course. And if your targets are bigger, then in that scenario you will end up losing money. Similar thing here, it will generate some profit in initial hours, it will dip say 30 to 40 pips. I'm not precise here, say 30 pips, and then again it will reverse the course and go on to cross above these higher band. So this kind of trades might get generated a lot of times, and then eventually here we have this ultimate break. But till that, these trades will be generated with lot less profit moves, and so we have to customize these formation, and we have to keep this kind of possibilities in mind whenever we want to define or design a system which we are going to rely while making our decisions to trade, whether to go long or whether to go short for the instrument of our choice. Now, coming back to these properties of the MA envelopes, this is simply derived using the deviation from the moving average line. So if we want to avoid this kind of situation, then one thing to do is smoothen out these lower time price moves and consider these MA envelopes over a larger time horizon, which will give us a lot more stability. Of course, it is not going to be 100% in any case, but if we can simply smoothen it out to at least some extent, and only some trades will be generated regardless of the volatility. In that scenario, I think we will indeed have higher probability. So here, if you were to trade, we had only one time the close on the higher side, and then next time it turned lower and it then went on to decline a lot. So similar kind of price moves are being seen in the prior instances also. And if we go back in time, so this is looking a lot better. The 50 hours candle formation, 50 hours MA envelope price formation, and here we have this stability also. So I think compared to the lower time frame formation of the MA envelopes, the larger time frame MA envelope formation is looking more interesting, but it is also not going to be foolproof. There will be instances where the false trade signals will be generated. Only the thing we can do is minimize the losses in such instances, and also always to keep in mind that any trade can go wrong. All we can do is minimize the losses, and whenever we are going to be right, we can look to optimize the trade gains. So that's the only thing which we have control over, not on any particular trade we can't really be sure. So we have to customize these formation, and for that we get these various options. So we get these defining factors, parameters, which we have to choose carefully whenever we are going to use this indicator for our purpose. So this is the MA envelope derived using the closing price. If you want to change the applied price, then all these options are there. You can opt for open price, the high price, or the low price, or median price, typical price, weighted close price. So all these kinds of options are available there. Whatever catches your fancy or whatever suits your trading system, that should be the price with which you should work. So I think the closing price is good enough, or you can even go for weighted close price where twice the weightage is being given to the closing price and only single weight is being given to the high and the low of the last hour's closing candle. So all this kind of customization can be done. We can also opt for the MA envelope to be calculated on the existing indicator. So if you do that, we will have the calculation done on the prior indicator. Now this is being done with the DEMA, which is plotted on the 15 minutes. So here we have the DEMA, and on this 50 candle period MA envelope has been defined. So this is the derivative of this DEMA, which we had seen in the last session. I had explained to you how you can utilize that indicator for looking to trade. So here we have this interesting formation. These curves are a lot more smoother compared to the actual DEMA. And let me change it to hourly to see if it is being plotted or not. And this is not really being plotted on the hourly. That might be because the plotting is only being done on the 15-minute time frame. All right, so I will zoom out a bit. So here you get the idea. Now we had the Euro USD's price formation on the downward side with the bearish bias. So we have these smoother curves, and we have good instances of making money here. And also, as I said, this data is now of the lower time frame, and because of that we are seeing a lot of whipsaw trades here also. And if we raise it to some extent, these whipsaw trades will be eliminated, but of course it is not going to be 100%. Nothing is 100% in trading. Now let us see other optimization or other customization options. So I will edit it and go back to the input price being the close price of the last hourly candle. Now the time period is 50. If we have to change this, we can always change it. Let's try with the 100 and see how it looks. All right, so this is now 100 hours, not 100 candle period are being considered while calculation of these MA envelopes are being done, and to that then this deviation of 0.1 is being applied. So we have a lot more smoothing compared to what we were seeing on the time period or the candle period of 50. So this is the new plotting. Now I will remove this DMA and we use the close price as the applied price. All right, and I will change the chart to hourly. So here we have this interesting formation now where the lag is quite evident as I have increased the candle period calculation, and we are now looking at this plotting of the MA envelopes on the 100 hourly candle period, and because of that there is a lot more lag, but also you can observe smoothing and also this kind of system where we will have lot lesser trading opportunities being generated, but of course this will have higher probability of profit. And here also these whipsaw kind of trades can be generated where not much of a movement is going to happen in one direction, and it might generate only small profit and it might then turn into loss also. So this possibility doesn't really get eliminated even if we increase this candle period. Only thing is that it is going to reduce compared to the lower time frame, and to some extent you can also apply the option to edit the deviation. So let us try with the editing option, and if we increase the deviation then we will have these trades happening with a lot lesser frequency. Now if we define a system where The trade should be taken only when we see the price formation of the Euro USD or any underlying instrument making a shift from one side to another, from lower side or lower band to higher band, and only if it is able to close and sustain the price move above that. If we define the system in such a way, then the trade will be generated only here, and then no, it won't be generated till the turnaround happens next time here when the price moves on the lower side all the way from the higher band and it closes on the lower side. So we have this trading system where we are seeing that higher deviation is able to eliminate these whipsaw trades to some extent, if not fully. And we have these instances of new trading opportunities also reduced. So we do have to keep all these things in mind whenever we customize the system. The new things will crop up. It will work differently compared to what we were seeing in earlier instances. So this is what it is. Now let us see what more options, what more things we can do with this indicator. So coming to the parameters, customizable parameters, deviation I will reduce to 0.2, standard deviation now stands reduced to 0.2. The MA envelopes candle period can also be reduced to say 50. So this is the formation, alright. Now let us see what more options are there available to us. The output can be made more colorful, more stylish. So style, let us try out different styles and different colors. Okay, the blue is looking good. I will simply increase the width. Alright, we change the opaqueness to 40/40 and see how it looks like on the chart. Yeah, it is looking a bit better compared to the straight line with the width of 1. Now the width is twice and the transparency has been increased. So we have these faint lines plotted on the chart which are easier on the eyes compared to the straight thick lines. Okay, but of course the functionality is not going to change. Only the aesthetic part is going to change with these editing tools. So let us now turn to other things. There is this panel where we have four options where we can opt for recalculate on new candle only. So only when new candle formation takes place, the recalculation of the value of the MA envelopes will take place. If you tick this box and highlight the time period zone, if you opt for this, then whatever is the candle period being considered for calculation of the MA envelopes, that will be highlighted whenever you click on any particular time period of the MA envelope. All right, and then coming to calculate from the custom data, because here we can opt for the instrument from the chart or you can keep it fixed to the Euro USD. The candle period can also be same as the use from chart or whatever is the chart's candle period, that can also be utilized, or you can customize it and keep it fixed to say 10 seconds to all the way till 1 month. So all these options are there. The spread side can also be kept fixed. You can opt for a ask or bid, or you can simply use it from the chart. So whenever you will change the side of the chart, the spread side of the chart, it will change accordingly. If you opt for this box to be ticked, then the underlying instruments chart of all the candle periods will have this indicator plotted on it whenever you make the changes from one time frame to another time frame. But if you uncheck this box, then you have to individually define on which candle period the chart, the plotting of these MA envelope should be shown, and only on those time frames the plotting will be shown. So generally I go with this option of show indicator on all period. Alright, so these are the editing options. So guys, that's it from my side for today's session. I hope you have been able to understand these technicalities of the MA envelopes and also its uses to look for some trading opportunities where we will be having the probability of getting good money, getting good profit in the trading business. So that's it from my side. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there for in-depth discussion on the market developments. For trying out these cool options, these interesting tools, you will need the JForex platform link, which has also been included along with the Dukascopy Analytics page and the Facebook page link. So all these three links have been included and available in the bio. So do check it out and let me know how it felt. See you next time around. Till then.